Hey everybody, Chuck Barone here. Tuesday, October the 4th, 2022. Fascinating day today, guys. Before I start the show, of course, I just want to thank everybody for your support, watching the videos, supporting the channel, all your likes and comments and questions. You guys make us happy and keep us going here every day. We really appreciate you guys. In the markets today, wow, nice. Now, if you're a bull in these markets, or if you got a 401k that you still have in these markets, good for you, man. A great couple of days for the market. Stocks surging again today. The Dow up over 1,500 points in the last 2 days. Everything up over 3% today. Broad-based rally across the board. I think what this is we had a little bit of an unemployment number. Not even really an unemployment number, but we had a little bit of information about employment today. The market took that information, plus the fact that the Bank of England caved totally on inflation, and took that as a sign that the Federal Reserve is going to be pivoting maybe a little sooner than they were hoping. The market, they just been going up and down with this, trying to guess this pivot, and it's been causing some crazy, wild gyrations in the market, man. It's great to be an investor on a plus 750 point day. It just sucks tomorrow if it's down 750 and the news isn't so great. It's really rumor and news driven right now. Not the best way to be buying and investing your money, at least in my humble opinion. I'm not much of a trader mentality. I look for fundamentals. I like companies that actually earn money. I don't want to be gyrating all over the place with these wild fluctuations every day, every week, every month. The bond market too, another bear market rally in the bond market. Kind of a weird mixed day though, because the 10-year falls 9 basis points down to 3.62%. The 4-year, 4.11% unchanged. Really? So there's more demand for these crappy 10 years with a lower rate than there is for a higher rate 2-year? This phenomenon just doesn't make sense to me. You got a pretty big spread there, 49 basis points, and an inversion too. So it just looks silly. And I think the bond market's got a little bit of trouble, and more trouble coming. The dollar today also on this rumor of this pivot. Rather than raising rates and strengthening the dollar, they're going to start cutting rates and weakening. So the dollar tanking today, down more than a whole point to 110.18 on the index. That's a pretty big move down from 114 just a week ago. So the dollar and the perceived, and I think the markets really wanted this to happen, that even at these levels, the dollar's too strong right now. So the market's getting its way, lo and behold, right, guys? On the dollar coming down today, metals had a great day. Gold up $1,726 per ounce, up almost $25 today. Silver, $21.13 per ounce, another nice rally in silver too. Great day for metals. And if, depending, you can if you just watch the dollar index, you can kind of guess what happened with metals. It's really been just very much as the dollar goes, so go metals, and oil too. Oil market today up nicely, 86.09 for a barrel of your West Texas Intermediate, $6.82 for your million British thermal units for natural gas. There's been some talk now of OPEC getting together and talking about cutting their output every day on oil. I think you got that. You got maybe the economy certainly, while it's throwing off mixed signals, there's a lot of parts of the economy that certainly do not look like they're in some kind of severe recession. So people, I think, this goes to the demand, but it actually broke out. It's been in a trough between 80 and 85, breaks out today above 85 to 86. We'll see if oil can hold that lofty number, or it starts crashing back down under 85. My guess is it probably will. Bitcoin, a good day today, up over 3%, 20,165. The odd thing about Bitcoin is it was up basically the same percentage of the stock market today. So it seems like Bitcoin is basically following the market, shadowing the market, however you want to say it. An odd thing, I think. we've been seeing with Bitcoin. In news you guys need to hear today, this is what I think would kind of move the market a little bit today. Now, they made a big deal out of the fact that job openings fell pretty big. The largest amount in the past 2.5 years, falling 1.1 million job openings vanishing. So I don't know if these jobs are filled or they're just not going to fill them, but the amount of openings crashing down, if you can call it that, I really can't, because there's still more than 10 million job openings right now. For 14 straight months, we've had more than 10 million job openings. That doesn't show me any sign of weakness in jobs, although the market wants to take it like the big pressure on employment is off. 10 million job openings. Okay, so if you go from 11 to 10, I guess that's better, but 10 million job openings is a lot. Right now, there are 1.7 jobs for every person looking for a job. So I think that even as more people are coming back into the workforce, there's a lot of work out there. I've had so many mixed signals on that too, even asking you guys what's happening in your neighborhood. Are there good jobs or are they kind of just crappy jobs? The signals have been very mixed, but it looks like if you really want work, it's there. There's work, there's jobs available. So now, as a result of these jobs, the job openings coming down, the actual unemployment number hasn't changed. The workforce numbers haven't changed very much, just this alleged job opening thing. Will that give the Fed enough cover to pivot? I don't think that alone will do it. I think we need to see something more akin to what the English central bank saw, and they had no choice but to pivot. I think that's what it's going to take for the Fed to pivot too. I don't think they're going to be scared of a recession, even political pressure, which is already starting up. I mean, politicians, analysts going crazy, knocking the Fed too much, too fast. Even some of the Fed presidents themselves voicing concern about too much, too fast with interest rates. I don't know, guys. What do you think? I mean, I think we need to get rid of this inflation. It certainly was not much fun yesterday filling my car with gas. Here in Nevada, prices spiking back up. I have to use premium unleaded in my car. $5.79 yesterday. Oh, that was painful. So I would like them to see this inflation get down to normal. I would like to, I'm not a guy that's borrowing money, so I don't really care what interest rates are. Actually, the higher the better, because I'm a guy that saves money, saves cash, keeps money in the bank. And, so I would like to earn some money on that. I'm old enough to remember when you could get really nice returns. 6 and 7 and 8% was not an unusual number to be able to get in a money market account. Hopefully we're on our way back up to that. It's going to change the mentality of the people in this country where, you're going to be rewarded for stashing money, saving money, and you're going to be punished for borrowing money. I don't know how well that works with the overlords, the billionaire class, who really are the ones calling all the shots in this country. I don't care if you're a politician or a banker. These guys, the billionaire guys, the donor class, these are the real puppet masters here who are pulling the strings. I don't know. What's best for them is probably what you're going to see in the future for us, what we're going to live with in this economy in the country. Other news today, interesting stuff. The personal savings rate fell to its lowest level since 2008. The savings rate sitting at 3.5%. Honestly, I was surprised. I was figuring the savings rate right now, with this inflation and the way debt levels are going up, I thought we might see a negative savings rate. 3.5% in my mind is still pretty high. It's not exactly what we've been recommending on this show. But if people are saving 3.5%, Great. What about you guys? Tell me today in the comments, if you watch the show and you have a second to comment, tell me, are you saving 3.5% of your income? That would be really nice, because that's the foundation. That's how wealth starts, is learning to live within your means. Not spending every penny you get, or even worse, pre-spending it, where, as soon as you get paid, you're broke because you already had the money already pre-spent. So yeah, save your money. 3.5% is a 2008 low since 2008. I'm going to have to go do a little research on that, though, because maybe I was misinformed or just misthought, but I didn't realize the savings rate was even that high. I was thinking maybe we were in the 1% or less category for savings. So it's nice to see that people are stashing a little bit of money. Also today, quick note, the United Kingdom came out today and announced they're cutting the plan to do tax cuts. If you guys will remember, there was a big kerfluffle over there. The central bank had to intervene in the bond market and buy bonds to protect the pension funds. The new prime minister, when she took office, pretty much immediately announced a package of tax cuts and deregulation, basically the Reagan plan from back in 1980. The markets did not react well to that, figuring that this would add to the inflation in the UK, weaken the pound. So the pound started cratering. Margin calls started flying for UK pension funds. The Central Bank of England had to intervene in the bond markets to save those pension funds and to save that bond market from a crash. And now, just like that, they're just doing away with those tax cuts that caused the whole big kerfluffle again. And I think that's part of the reason today you saw the dollar take a hit. When you combine the fact that they're not going to cut those taxes, I'm sure you got a bounce in the pound today. And the fact that the market now is starting to wager real money with these rallies, that the Fed's going to pivot sooner rather than later, here we sit. And finally today, last little thing, Credit Suisse. You guys have heard the name or probably read about it. Big Swiss bank. They're in the news here. What happened was they had some big fears in the bank about the bank's financial health, because there was a sudden and big change and a big bump up with its credit default swaps in the derivatives market. Credit default swaps are basically like an insurance bet that a company will either pay or not pay its bills. And all of a sudden, those default swaps started going up. So it was looking like there was somebody knew something about the financial health of Credit Suisse. And Credit Suisse was actually forced to put out public statements, to have their big hotshots and big shots contact their biggest clients to assuage their fears and let them know all was well at the bank. I don't know really if this was a rumor or there's some fire to this smoke, but they were afraid we were dealing with our Lehman Brothers moment here, because Credit Suisse is a big bank. I mean, huge, one of the biggest in the world, with offices and their presence is everywhere. They're probably one of those too big to fails too. I don't know how Switzerland does it, but we're going to keep our eye on Credit Suisse, see what happens with them in the future. Anyway, guys, we got a whole bunch of new data coming out over the next couple of days. We're going to have a lot of interesting stuff to talk about. We appreciate your guys' support for the show. As always, if you like what you're hearing, hit the like button. Ask your questions in the comment section. Share the video with your friends, your subscribers. Make sure you double check your notifications too. We've been getting a lot of comments from people about not getting their notifications. I guess YouTube's doing the purge thing with us again. But anyway, we really appreciate your guys' support. Lots of interesting stuff over the next couple of days. By the way, if you have a more intense question or a more in-depth question or something a little more private you don't want to put in comments, ask Chuck Barone at gmail.com. We'll talk to you guys again tomorrow. Until then, take care. Thanks.